UntitledCharts.com daily analysis for the S&P 500 for Wednesday, October 17, 2012. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. Another white body candle, and that's the third white body candle in a row that we've had. A smaller size to the body of this candle, suggesting that the buyers, even though they've maintained the upside momentum, they have lost some of that momentum for the trading day. Previous day's white body was almost twice as large as the previous, and it does suggest that the influence of this resistance above the 1460 level may be coming into play. We can see the shadows on the top of these candles as the market tested above this 1460 level, and there was strong downside price rejection as the market tested into that area. So there is a possibility you could see price rejection from that area once again. Looking at the previous day's trading, we had a very strongly directional market, very large white body candle with the market closing up towards the high. So a lot of upside momentum for the buyers. The buyers have closed in control, been strongly committed to taking this market higher today. Strongly committed throughout the trading day as well, opening towards the low and closing towards the high, and closing with control as well for the buyers. Previous day's trading, we had a bullish breakout up above the Kijun-sen and the Tenkan-sen, and that's quite important, and I'll come to discuss that in a minute. But looking at this pattern that's forming at the moment, it is a flag type pattern, quite a large congestion area, and here we see the prior uptrend in the second time frame. If we're looking at this time frame here, the size of the pattern is quite too large to determine this is the trend leading into this pattern, but certainly this bigger picture pattern is much more significant for the size of this congestion area, and it is a flag type pattern. Flags tend to be continuation patterns, and the reason why this is more likely to be a continuation pattern and we're looking for a breakout from the upside is because of the strong support down below. We do have the cloud trading just below where the market is, and that will offer very strong support. So if we do have a reversal down through the bottom barrier of this pattern, there probably will be a limit to how far the move goes. The move would be the width of the pattern, and considering that the market is overall bullish by trading up above the cloud, then it's most likely that there will be a breakout to the upside. Now, if we do see a close up above the upper boundary, that would be confirmation of the pattern, and the target would be the measured move, the move into the pattern. That's roughly about 150 points projected up from the breakout. So there is a possibility that the market could be trading up towards possibly the 1600 level if we do see that breakout. But we do have some resistance on the way up there. We do have resistance up around the 1523 level and higher levels, so it's doubtful that the market would make that target quickly. Another alternative method would be the distance between the highest and the lowest point of the flag projected up, which would give us a target roughly up around this 1500 level, just beyond the 1500 level, and that would make much more sense as a potentially more probable target. Now, in terms of the Fibonacci extension, and we're examining the relationship of the current first time frame uptrend to the previous time the market was trending up. Yesterday's trading, we saw the market trade in a strongly bullish manner up above the 161.8% level, and today we've closed just at the 261.8% level. So there is a possibility we could see a change of trend, and that's the influence of this previous strong price rejection from this zone extending from 1460 up to 1474, the resistance offered around that level. We did just close up above there. The buyers are in control, but the reduction in the size of the body of the candle does suggest that the buyers have not maintained the momentum that they had on the previous day, and there is a possibility, but certainly no sign yet that there will be a turnaround in this market, and no strength from the sellers at the moment. In terms of the Fibonacci retracement, we're looking at the relationship between the current first time frame uptrend to the prior downtrend, and here we've seen an expansive mode through the 100% level yesterday, trading just to the 161.8% level in a bullish manner. No strength from the sellers. The market's gone on with the move today. Once again, we've seen the market close with a strongly bullish candle for today's trading, with a buyers in control through the 161.8% level. Good possibility of a test to the 261.8% at 1473 coincides pretty much with this swing high, and that does set that area up as a potentially strong area of resistance. In terms of the trend channel and this trend line here, it's important to look at this darkish blue line here. Previously, 3 trading periods ago, we saw the market bounce off there, and that does reinforce the importance of this line. There is a possibility that the market could trade up through this zone, which extends up to 1474, and trade up towards the line, and that would give us a target potentially up above the 1500 level, and perhaps testing up to around the 1523 level. Now, in terms of Ichimoku, and I've touched on that just earlier, the market is bullish in all 3 timeframes now, and that's quite significant. We have the market still trading up above the cloud. The market has traded sideways for a period of time, and the cloud has come up to meet the market, and that will give this market a solid base of support, very close to where the market's trading at the moment, and a very thick amount of cloud that the market will be interacting with over the next week or so, so very solid support down below. The market for the previous day's trading has closed up above the Tenkan-sen and Kijun-sen, giving us a bullish signal in the medium and short-term time frames, and it was a strongly bullish signal because it occurred up above the cloud, and also we had a very bullish candle. Now, as I've mentioned, we do need to be aware of this strong resistance overhead, and if we do see the breakout up above there and a strongly bullish breakout, and certainly a breakout up above 1474, this market could fairly quickly end up trading to the 1523, or at least to the 1500 round number level.